Inflation is here in a big way. And is there a reason to worry? ARK Invest is concerned about this scenario because it's the opposite of deflation. Truth is, when inflation is on the rise, prices rise, which means that the value of money is going down. Here's what Cathie Wood's ARK Invest believes you should do to resist inflation. Inflation is an ongoing concern for ARK Invest. There have been some notable inflationary events in our history, such as the period during the late 1970s and early 1980s, when consumer prices nearly doubled in a matter of years. I think many people are looking now at the risks of not inflation going up, but inflation turning into deflation, says Cathie Wood. What Cathie Wood ARK Investment believes you should do to resist inflation. ARK Invest believes that one of the most sensible ways to bring down the rate of inflation or to increase purchasing power is to come to grips with the fact that we live in a world of inflation, which creates an environment where purchasing power continues to diminish, even if prices are stable. ARK Invest accepts that inflation is a constant threat to investors and has developed a unique framework to help protect their wealth.
That's wonderful.
The ARK Invest Inflation Sensitive Fund AIF is designed for investors who are seeking alternative investment opportunities that offer exposure to inflation. Inflation can affect the value of your investments in ways that are hard to predict, making it important to have the right investments to help you ride out these inevitable bumps. ARK Invest sells long-only investments and is highly leery of short-term trading and speculation. They believe that the AIF is the most sensible way for most ARK investors to bring down or at least flatten their exposure to inflation today. One important thing is to come to terms with why inflation is so harmful and how it can affect your returns. To better understand these terms, sit, steal, relax, and continue watching this video.
Don't stop watching.
Why inflation is so harmful and how it can affect your returns. Financial markets, the Federal Reserve, and corporations all keep tabs on inflation rates out of concern. The value of money decreases as inflation causes prices of goods and services to rise. When inflation rises, businesses have to pay more for inputs. Consumers may lose purchasing power if their earnings don't increase, and efforts to curb inflation through monetary policy can hurt economic expansion and job creation.
Is that bad?
Want to be a better investor? People who lack financial knowledge may find it challenging to invest in a time of excessive inflation. Given our expertise in this area, we aim to keep you apprised of the latest financial industry news and trends through regular updates. You found the ideal channel if you're interested in the most educational and amusing video on personal finance. Therefore, subscribe with post notifications turned on. In addition, increased input costs due to excessive inflation can put a damper on business profitability. This makes businesses nervous about the future, so they halt hiring, which lowers wages and hence lowers people's standard of living, especially those on fixed incomes. Inflation is that bad, balloons can get a price. Traders may be left scratching their heads since inflation appears to affect the economy and stock prices, but not at the same rate. Individual investors must sort through the muddle to make informed choices about how to invest during inflationary times because there is no clear answer. It's been found that certain stock classes do better in high inflation environments. How do you identify these stocks to invest in? Not something to lose sleep over, but learn how and when to invest during inflation in the next few seconds. Investing during inflation. There are 3 guidelines to follow when investing during inflation. It's possible to predict which companies will do well in an inflationary climate using one of 3 straightforward methods. Invest in companies that, number 1, own stuff. Inflation, by definition, increases prices, therefore, the worth of possessions rises with inflation. Those who have access to assets that are appreciating in value are able to profit from inflation and protect their purchasing power. Number 2, making stuff. Revenues increase with inflation because of rising sales alongside price increases. For the same reason, the definition of inflation also states that it leads to a rise in the prices of goods and services. As a result, the maker of goods or services can now make more money from said sales. Number 3, have assets that generate income. In most cases, Holding gold will protect buying power against inflation. Making one's own goods or providing one's own services is a smart way to protect one's finances from the effects of inflation. If the cost of materials and labor goes up, a painter, for instance, can charge more for their services. Just keeping up with inflation is the case everywhere. Having material possessions or producing one's own goods is only a hedge against inflation. Having assets that generate income is the real prize. Consumer spending, company investment, and employment rates, as well as government programs, tax policies, and interest rates, are all impacted by inflation. Because inflation eats away at the purchasing power of your money over time, it's important to have a firm grasp on how the market works. After a period of relative stability, inflation has lately risen to its highest level in 4 decades, prompting investors to examine their portfolios and the steps they should take in light of the new investment lands. Currently, the United States is in a market recession, and ARK Invest suggests investing in innovation during this market recession. Find out their reason for suggesting that by watching our video, why Cathie Wood's ARK Invest is still investing in innovation during market recession. Thanks for watching today's video. I hope you enjoyed it.